Let's take a look at what's happening in the money and fixed income market. The overnight lending rate contracted or slow by 92 basis points to 8.3% in the absence of significant funding pressure on the system. Activities in the treasury bills secondary market were quiet as the average yield was unchanged at 3.6%. Looking at other market segment, open market operation, and of course the treasury bond secondary market traded with mixed sentiment as the average yield closed flat at 11.1%. Okay, let's bring in our guest analyst now, Mr. John. John Kanayo is Head Research and Strategies, Imperial Asset Managers Limited. He joins me now via the telephone. Thank you for your time. We appreciate you for coming again.
Thank you, Frank, for having me, and thank you, everyone.
Well, in the money market, we're seeing that within the interbank activities, overnight lending rate contracted by 92 basis points to settle at 8.3% there. So what does this imply? Because the report says that that happened in the absence of funding pressure on the system. Help us to make sense of these activities.
Oh yeah. Thank you, Frank. Like you said, overnight rate was down by 92 basis points yesterday, and settled at 8.25. There wasn't much funding pressure, but what we have seen is that the market was a bit cautious, obviously because of the money market activity, talking about primary market activity yesterday. System liquidity, as you have pointed, closed at 351.27 billion. That was higher than the figure we had on Monday morning, which stood at 299.98 billion. If you move from this very money market, you move into OMO market. OMO market was largely unchanged yesterday. Average yield settled at 3.87%, and obviously because of the PMA in the bond market yesterday. Then you move to NTV. NTV was equally unchanged. Investor sat on the fence. Average yield closed at 3.52%. You move to the bond secondary market. There was a few demand seen at the short end of the curve, particularly March 2024 maturity, that yield declined by 2 basis points, and March 2025 maturity yield declined by 8 basis points. Overall, average yield across this market was unchanged.
But let me quickly come in.
11.55%. Yes.
Yeah, I wanted to ask. The reason for the low demand or the few demands we're seeing in the bond market there.
The reason is basically because of the bond auction that was scheduled in the morning. Market participants would have shifted attention to the bond auction with the mindset that they're going to look at what the DMO will be offering to market, if there will be any major departure from what the market has already known. And that really informed what really happened in the bond market.
Oh, okay, but let me ask you, what's the activities now in the treasury bills market? Looking at the fact that we had inflation released into the market yesterday, and again, we've seen in recent time, the CBN intervention trying to auction, primary market auction in the market there. So we thought that mop-up should have impacted on the inflation rate that we saw yesterday, but that perhaps didn't happen. What's your position on this?
Yeah, the mop-up that we usually see in the market through auctions, like OMO, NTV, and bond auction, is actually to control system liquidity, and it has nothing much to do with. It has a leg because what CBN used that is to control or to contract system liquidity. But if you look at, like you pointed out, system liquidity was marginally up because there was no OMO auction between there was no OMO auction on Monday.
Right.
What we would have what we are expecting is that probably inflow would have come in through futures auctions
It's all right.
between, probably that Monday. If you look at the bond auction that was done yesterday, what CBN, I don't know if I can take the bond auction that was done yesterday.
Oh, okay, just quickly so that we can wrap up now. And what to expect in the week. Yes, inflation figures are out now. Will that impact or change how cautious investors are in the market? Let's wrap it up with that.
Okay, thank you. Bond auction that was done yesterday, DMO offered a total of 225 billion across 3 maturities, 10 years ending March 2025, 10 years ending March 2032, and 20 years ending January 2042. These 3 maturities had 75 billion each on offer. Bids that came in for each of them, the 10 years ending March received 125.92 billion. 10 years ending March 2032 received 144.99 billion, and 20 years ending January 2042 received 334.71 billion. Eventually, DMO allotted 88.53 billion for March 2025, 85.34 billion for March 2032, and 171 billion for 2042. Average yield or spot rate was unchanged for March 2025.
It's all right.
March 2032, spot rate dropped by 5 basis points, while the long maturity or the long tenure, the one ending January 2042, spot rate increased by 10 basis points to set at 13.0%. We saw inflation figure coming into the market yesterday. Inflation for April increased by 90 basis points. And this is
now, just a moment, because of our time, I just want us to look at how that will influence the investor's position. But because of our time, we may not be able to go further than this anymore. We'll look at this tomorrow by the time we have you back again. Thank you so much, John Kanayo. He's Head Research and Strategies, Imperial Asset Managers Limited. Thank you for your time on Business Breakfast.